All right. Hello, everybody. Welcome back to another Sunday Futures show. We are here today, Sunday, September 8th, 7:47 p.m. Got a market open in about 24 hours, and we got a lot to talk about before we get into that market open. Hope everyone had a good weekend. Hope everyone got some time to relax, chill out, kind of just recharge, do all that good stuff. It was a fun weekend for one stock that we cover on the channel that I know a lot of you guys keep up with. But for the rest of the market, I think for the next 45 minutes, we're going to dive into like accepting reality because futures are red. And in about 12 minutes, we'll see what we have on Robinhood overnight trading. When things open up, I think it's going to be a little bit ugly, except for Palantir. I actually think Palantir is going to go up. But besides that, I think the rest of the market's going to be a little red. Here are futures right now. We're down a little bit more on some of the major indices. And we got to go back to accepting what is reality and analyzing what happened on Friday, besides the news that Palantir got into the S&P 500. But before we get into the macro, of course, we're going to spend the first 5-6 minutes discussing, obviously, Palantir getting into the S&P 500. So look, I mean, I just did a video on it today. I recorded it, put it out. For those that haven't watched Daily Palantir episode, it spent 22 minutes going in depth. So I'm not going to go too in depth right now. But I mean, this whole week has been exciting. I mean, this whole week, the anticipation leading up to it has been exciting. And honestly, this picture right here, it has legitimately been it has been a picture that's given me goosebumps all weekend. Goosebumps all weekend. Seeing this S&P PR from the S&P Global company saying Palantir, Dell, and Erie Indemnity, which is an insurance company, by the way, for those that didn't know, have joined the S&P. I mean, Dell was in the S&P a while ago. Then they went private, went public again. So like, that's fine. Erie Indemnity, no one knows who the hell they are. But Palantir being first, there's a reason they put Palantir first in the list, because like, obviously, fucking Palantir is the one that matters, right? So that one is, we got Palantir Hotline in the chat. What's up? Shout out to you. He says literal goosebumps, literally goosebumps. I haven't come down from my high yet. Yeah. I mean, to be honest, dude, this whole week. So let me tell you, basically what happened is after the stream, I go out and I go take a walk around the lake that I have. And I get on the phone with a couple people that I'm close to, and I'm talking to them about, the inclusion, what it means, how they're feeling about it, all this stuff. And it's just like, after that walk, I'm seeing how people are reacting. I'm looking at the messages. I'm seeing what people are talking about, what they're thinking about. And it's just like, damn, like it's one of those things where it's like, it was a really big deal, dude. It was a really big deal to the company, really big deal, obviously, for the stock in the future. I don't think volatility is going to change based on us getting in. I mean, Tesla has been volatile. CrowdStrike's volatile. SMCI is volatile. All these stocks are volatile, even if they get into the S&P 500. But the prestige and honor that we get to have as the company is now included, that's a big deal. So I think for the whole weekend, if you've been an investor for a while, it was one of those milestones that was big to see. I got to call a couple of people over the weekend that I haven't spoken to that are in the community. Some people that I've been interacting with through text that finally we got on the phone and just got to talk about the entire journey and everything. And it's been cool, dude. It's been really fun. It's been really, really fun. So, yeah, it's been amazing. Now, the problem is at 6:00, I looked at futures and I saw how red they were. And I was like, oh, so as amazing as that was, as crazy of a high as that was, unfortunately, Friday. So now let's get into the macro discussion. Friday was the worst day in 2024. I think it was one of 3 really bad days in 2024. And if I'm not wrong, I believe it was like the worst day. It might be off by a couple of percentage points in terms of how bad it was, but Friday was bad. And because Friday was bad, we have to go back to the reality that, look, this stock market is in a pretty tough situation right now in terms of figuring out how this is going to play out. So this is Palantir after hours, up 7.85%, 32.71. Quick thoughts on the stock. I think when it opens at 8 p.m. on Robinhood, I think the stock pumps. I don't think it sells off on Robinhood. I think people will end up buying it just because they're excited about the announcement. Tomorrow, I also think it kind of pumps. I know people are saying sell the news, and yeah, it could be. It very well could be, but I think there's going to be a lot of excitement around Palantir based on getting into the S&P 500. And again, this was only a couple of hours of action after hours on Friday. We have not had a full trading day. So I think Palantir might be the only green stock tomorrow if the market's red. But if the market obviously goes down another 1 or 2%, I don't know if Palantir is going to be able to maintain this momentum. But even if we fall back to 30, I mean, like without the pump on Friday, we would have already been below 29% probably 28.50, because we were touching 29.50 on Friday. At least we would be in the 29s. We would not be in the 30s if we did not have this announcement. At 3:11, Palantir was green. Look, so we had 29.50 right here at 11:30, and then slowly by 3:30, we were at $30.37. We were green for the day, up 2.5% from the lows. It made no sense other than, hey, the market is obviously expecting we got included. S&P 500 ended at 538. This was the S&P 500 for the past week, dude. Look at that, 551 at the top, and then slowly came all the way down. And then this was Friday, just disgusting after that jobs report. We'll talk about in a second, at 537, and pretty much ended the day here at 538.37 for Friday. So the question now is going to be, what do we expect going into the coming month for September, and how do we think it's going to play out going into October? So let's get into some macro discussions. First of all, what are we even expecting this week? So this is the economic calendar that we should be looking at for the week. We do have CPI this week, folks. We have CPI. And if we have CPI this week, then I think that is going to be a big catalyst, and that's something we have to think about. But that is going to be one of the key events that's going to determine if we have 25 or 50 bips. So on Monday, we get wholesale inventories and consumer credit, which is tomorrow. Tuesday, we get an optimism index. Wednesday, we get CPI and core CPI, which is really important. Thursday, we get, again, initial jobless claims. Market's expecting about 225,000. Producer price index, PPI, that should go down as CPI comes down as well. We get the monthly U.S. federal budget. And then on Friday, we get import price index and consumer sentiment. So really, Thursday and Wednesday are going to be the big days this week. And they're really going to matter. Wednesday in particular, that CPI number is going to be important. I think, put in the chat what you think we get for CPI. I think we're probably getting 2.7. I mean, I think we're definitely going below 2.8. If we looked at gas prices and overall energy, oil right now is at 67 a barrel. I'm pretty sure we see a decent decline, which is going to further the argument for a rate cut. But I mean, like, if we get to if we stay at 2.9 or 2.8, then it's not going to be as effective. Now, if we get below 2.6, I think it's going to be really fun, because then the Fed is going to have core inflation that is very low compared to where the Fed funds rate is. But the argument is going to be, what is going to be the first cut? Is it going to be 25 or is it going to be 50? And I think that's what we also have to figure out and try to make sense of as well. So let's kind of talk about that. So let's get into the jobs report that we had on Friday and go deeper in terms of what that means for this week. So I think the jobs report, to give a summary to those that missed the jobs report last week, we added 140,000 jobs, 142,000 versus 160,000 that the market was expecting. Unfortunately, that jobs report was not good enough to get the market to start feeling that things are going in the right direction. And I don't know if it was a Friday algorithmic sell-off, but we pumped on the news. Like, it was a really quick pump on Friday. But then as soon as the market opened, the pump faded away pretty aggressively. And I think one of the reasons the pump faded away is because the market does not believe in these numbers. The market does not believe in these numbers. Unfortunately, July and June were revised down. And if you remember in 2021 or 2022, if you were paying attention to these non-farm payroll reports, the revisions were going to the upside because we were adding so many jobs, obviously because of the COVID rebound. Now we are obviously slowing down, which is normal. That happens. And as a result, we are adding less jobs. So the revisions are to the downside, which is just not good for the broader equity market. So unemployment rate went down from 4.3 to 4.2. I think that's because we added more workers per se, right? And that's what kind of tinkered with the denominator of that unemployment rate, which is why that came lower. But that's not a reason for why we're, actually adding less jobs or adding more jobs than expected, causing the unemployment rate to go down. So I think the markets were scared on Friday because they were like, wait a second, we can't trust these numbers. Wait a second, the numbers came in worse than expected. We need really good numbers to prove the consumer is not in a recession. So the only thing we can interpret right now, given the fact that it's September as well, is that we should be more cautious. And if the market's purely basing it on optimism versus cautious, again, you're buying stocks for a future cash flow and a future return off that cash flow. If you don't think the future cash flows are going to be substantial, especially in a short period of time, and you're a hedge fund and you're trading based on how hedge funds trade, then, for example, why would you put some money into NVIDIA? Now, granted, the NVIDIA argument is really unique because I think NVIDIA is is divergent from the macro because NVIDIA's CapEx spend, or the CapEx spend that goes to NVIDIA as revenues, is not slowing down. Unless the hyperscaler starts slowing down, well, then the question, why would they slow down? Because of layoffs, because of unemployment, because of problems in their core businesses. So if we get into a recession, that's what affects NVIDIA. And I think a lot of the broader hedge funds are thinking, well, wait a second, are we in a bad place? Are we going to get into a recession? Is unemployment increasing so aggressively and jobs slowing down so rapidly that NVIDIA itself will be affected? And that's why the entire semiconductor sector, along with NVIDIA, they took a nasty hit last week. One of the reasons semis took this big of a hit, this is why people say analyzing the macro is not that important. Dude, I think the macro is explaining why the semis got hit. NVIDIA, and not just NVIDIA, a lot of the other semiconductor names, particularly AMD, have been trading at pretty egregious multiples all year. But the reason those multiples were justified was because the growth was going to continuously allow them to grow into those multiples. And that growth has been something we haven't seen before, really in a long time from a secular perspective. Haven't seen, 282% year-over-year growth that NVIDIA put up a couple quarters ago for a while, since really the beginning of the internet. And when those early companies and the companies that were building on top of the internet, like the Facebooks, Meta, Googles, Amazons of the world, et cetera, were just getting started. So the market paid a hefty premium for it. Well, if the economy is getting into a recession, the market's just not going to be able to pay those premiums. The same thing, by the way, affects Palantir. Now, Palantir has been resilient against all the AI drama that is in part caused by some of the macro sell-off that we're seeing. Because now if you have a macro economy that's starting to do bad, investors start saying, well, why are we paying this AI premium if no one's spending on this shit? No one's going to buy the GPUs. No one's going to buy AIP because people are losing their jobs. People are more concerned with buying like the most basic things that they need to survive. So from that perspective, Palantir would get hit as well, but Palantir's just been so resilient. They've been so frothy, but not frothy. You could argue the valuation's frothy. Sure, I'll give you that. But they've also put up the numbers and the results, and they've stood the test of time. The question becomes, how bad does the broader market need to get for the semis to completely collapse, which is what some people are thinking could happen, even though they've already fell 30 to 40%, a lot of them. I mean, Broadcom, dude. Broadcom fell 11% on Friday. 11% on Friday. Why is Broadcom falling 11% on Friday? Well, it's falling 11% because the market is not believing in semiconductors anymore. And they're thinking if we get into a recession, Broadcom's not going to have that much demand, even after Broadcom raises their full year outlook and grows 47% in one quarter. So I say all this to say, I think this week's going to be very important because the market's going to have to make a decision. A, does the market believe in the jobs report? B, when we get a good CPI, does the market believe that we are cutting into strength versus cutting into weakness? CPI coming down is a reason to cut into strength. That is a good thing when CPI comes down. But if you believe there's this massive unemployment, then we're cutting into weakness, even if CPI is coming down, which is not going to be a good thing. So the market has to figure out, hey, are we cutting into weakness? Are we actually deploying in a meaningful way that allows our capital to be able to expand? And then if we look at SMCI as well, 385, like just absolutely got destroyed on Friday, down 7%. Are we going to believe, this is the final thing, that the Fed is going to cut appropriately? What is appropriately? I mean, I don't know. Is the Fed going to cut appropriately? Is that 50 bips? Is that 25 bips? We're really going to have to figure out how the Fed determines what they think we're going to need to be able to do. And I think the broader market is going to have to figure out, is 25 bips good? Is 50 bips good? Is 75 bips needed? Is 50 bips and 50 bips in November going to be what we need to see? Or sorry, that would be in December or November. Yeah, it would be right after the election, I believe. Or do we need 25, 25, 25 to end out the year? The market, if we look at the CME Fed tool, the market is now officially pricing in the odds of it being 50 because the market's saying, hey, if we have unemployment that is still going down, but not aggressively showing any signs of cooling, aka the labor market is still really tight, well, then from that perspective, we probably should still get more of a rate cut. And that's what you can see right here in the Fed futures right now. So I don't know. It's going to be really, really interesting to see how this plays out. But that jobs report on Friday is what kind of sets up this week. And ultimately, the market's going to have to figure out how to interpret this. All right. Overnight markets are open on Robinhood. Let me read out some of the results that we have. While I'm reading that out, let's go to Bitcoin. Bitcoin did pump a couple of minutes ago. Bitcoin, or not a couple of minutes ago, but a couple hours ago, it was at 55.2. Right now it's at 54.8. So now it's falling right here, but it was in that 55 level after Bitcoin fell to 52,000 on Friday as well. So Bitcoin took a nasty hit just with the rest of the market. All right, so on Robinhood, we have Robinhood stock is up 1%, $19.19. Wow, that was at $18.94. So that one's up. Palantir, $32.60. Palantir is maintaining the 7% pump. Not really too much action besides that, but Palantir is green. Let's see what else we have. Let's go to the Mag 7. Oh, here it is. Okay, so GameStop is up 1%. Snowflake's down 0.21. Tesla is up 0.35. Tesla also got hammered, dude. They fell 8%. They were at almost 235. Now they're at 211. PayPal's down 1%. ARK is flat. SoFi down 0.29. SoFi below $7. TFC down about 0.41. Affirm down about 0.10%. Opendoor down 0.53. Palantir, again, 32.63. Bitcoin, 54,875. Coinbase as well. Bitcoin collapses. Coinbase collapses. Coinbase now at 149. Which is just disgusting, dude. That thing was at 250 a couple months ago. Shopify was at 75 last time I checked. Shopify now 67.96. They're up about 1%. Apple at 220. Amazon at 171. Microsoft at 401. Microsoft's $1.48 away from being below $400. Netflix at 663. Disney at 87. Starbucks at 90. Yeah, things are relatively flat. We do have some red. It's also coupled by some green. It's not like crazy red yet. S&P 500 on Robinhood is actually up a little bit, 0.03%. It is a little bit, but it's up. And then QQQ is up 0.03% as well. So we're up a little bit on some of the major indices. IWM, let's take a look at them real quick. IWM on Robinhood. And IWM has been shitting the bed as well. Like everything that you would think could somewhat perform well if we had a sector rotation, IWM down about 0.13%. It has not been performing that well. Things have been pretty tough. And so I next week it's going to just be that jobs report. Again, we added less than expected. It messed up the semis trade. It makes people wonder if AI is going to give an ROI, even though we had really good earnings from Broadcom. And now it's going to set up what this week might end up turning into. Let's talk about Tom Lee. Let's talk about what he said. So Tom Lee put out a note on Friday, and he basically said, hey, we are front loading a lot of the pain that we're feeling right now. And I thought that was a very interesting way for him to frame it. Now, either he's coping, right? And he's like making up an argument, which I don't think he's making up, but you get what I mean. He's like making an argument to kind of justify some of the pain that we're seeing, even though he did say a couple of weeks ago, hey, expect 7 to 10% of a sell-off going into September. And so far he's been right about that since we're down about 4%. But he's either coping with the fact that the market is just being seasonally bearish and it's pulling forward all of that bearishness, or there is actually a legitimate problem underlying the broader equity markets, and those things are going to start revealing themselves. So far, and you can either take this as bearish or bullish, but the majority of the market does not feel, when I'm reading the Goldman Sachs equity reports or the Bank of America equity reports or all the different reports that I'm reading that came out on Friday, most of them think we're in a bull market and this is just seasonally bearish. And so I don't think Tom Lee's on an island right here saying that, September sucks and we just have to deal with it. Pretty much all the banks are saying the same thing. Now, again, you can say, well, the banks are the banks and they're going to say whatever they want to say. Sure. But pretty much every equity report I read pretty much believes in this thesis right here. What you're looking at right now is a bad September leading to a good October. So just based on this chart over the past couple of years, every September has been pretty aggressive. And in order to get a good October, you need September to be aggressive. Now, that doesn't mean October can't be bad, but in general, you usually get a red September followed by a green October. And I think a lot of the larger banks on Wall Street pretty much think, hey, this is a sucky September. Usually we're down 4% for the month. We are down 4% for the week, folks, on the NASDAQ and the S&P. I mean, it's got so bad, dude, that bonds have started outperforming small caps year to date. Take a look at this. AGG is outperforming IWM year to date, given how bad they fell. AGG is up 4.5%. IWM is up 4.1%. It's just crazy. And AGG is the core U.S. aggregate bond ETF. If you were just like wanting to buy bonds without having to literally buy bonds, you could just buy AGG. So I do think that Lee's right on this idea that, hey, it's seasonally pulling forward a lot of the problems that we're having. And the catalysts are the FOMC meeting, which, by the way, the Fed presidents are not going to be talking at all for this week. So don't expect Bostic or Goolsby or Waller to come out and say anything, because they're not going to say anything, because they have a dark period. Just like with company earnings, they're not allowed to say anything a week before the Fed meeting. That is going to be a massive catalyst. But then the question is going to be, is 25 bullish, is 25 bearish, is 50 bullish, is 50 bearish? And like, I don't know what the answer to that question is going to be. I really don't. Fear and greed index down at 39 as well. So we are officially in fear. Let me see. This was from Friday. Let me see if that changed after the bell. I don't think it changed too much. Yeah, still at 39. So typically, you know, when you get to greed and extreme greed, you sell. When you get to fear, you buy. I'm waiting for a little bit more extreme fear. I think there could be some election volatility that gets us just like stupid prices, like Palantir going back to 23, 24, Robinhood going back to 14. That's when I get very excited. But if that doesn't happen, you know, the dip doesn't have to be super, super compelling to buy, but I don't blame anyone for getting interested in the dip as well. Let's check USD over JPY as well. Yeah, so this thing keeps going up, or keeps technically, well, going up, but technically means falling. So this is another problem. I haven't dug too deep into if the yen carry trade is coming back, but unfortunately, over the past 5 days, USD JPY is down 5%. Sorry, it's down 3%. Now, why is that bad? Again, as the Japanese yen goes up against the dollar, that means the short that people had against the yen gets messed up. You want to see people get more yen for their dollar versus less yen for their dollar. If you get less yen, the yen is getting stronger. If you get more yen, the yen is getting weaker. So this thing is this possibly a reason why we had a Friday sell-off of a lot of tech names? Because again, the Nasdaq outperformed in terms of going down versus the S&P. Maybe because people might have sold tech stocks to pay back their loans on the yen, but I don't know if it's as aggressive as saying August 5th kind of happened again. Maybe, you know, that could be in the works, but I personally don't think that's the case. It could be a little bit of a black swan event potentially coming into this week. All right, you guys are saying Palantir's at 33. Are we at 33 overnight? Let's see. Are we at 33 overnight? Yeah, baby. Palantir at 33.12. Look at that. It's up 9% overnight. Volume is 54,000. That's not amazing volume, but that's not horrible volume. And I mean, that's a new 52-week high on Palantir at 33.15. Did we break 33? Yeah, no, did we? Hold on. What's the 52-week high? The 52-week high. Yeah, literally 33.15. I think we touched 33 for a second a couple weeks ago, right? Hold on. We touched it. Yeah, we touched it for like a second. And then it came back down. Now it's at 33.22. Uh-oh, dude. It's pumping. 33.24. It's pumping. I mean, I had a feeling it was going to pump, dude. This is big news. S&P 500 is big news. CrowdStrike pumped. SMCI pumped. All of them pumped. Now, do they sell off after the pump? Sure. But they do get a pump, dude. S&P 500 people front run that. You tend to get a decent pump. All right, that's exciting. That's super exciting. We got Chad in the chat. LFG. Chad, I was going to send a picture to your boy, Iliano, because not only am I wearing the jacket, I'm wearing the hat. Iliano got mad at me today. He's like, yo, I sent you all this merch. You never wear it on stream. I'm like, dude, I just like that video today where I was wearing the Adidas sweater. I had 20 minutes to make that video, dude. We had to go to something for like some family thing. And my mom was, there's an outtake. I should play the outtake one day. My mom was yelling like, come on, we got to go. And I'm like trying to have this conversation about the community on Pounds. I'm like, guys, so this is such a big idea for the community. My mom's like, come downstairs. And I'm like, Mom, I need 2 minutes. So I didn't have any time to think about what I was wearing. But yeah, for the stream today, we're wearing all the gear. And shout out to Iliano again. This is clutch, dude. This is like, it's fun. It's fun to rock this gear. I got the white hat on today as well. So super, super dope. So yeah, Palantir's pumping right now, 33.15. I think we're going to keep the pump, 33.31. Forget 33.15, folks. Holy shit, bro. We are pumping. We are pumping. Volume is, again, so the volume's not amazing. If we had like 300,000 shares, I would be like, all right, so this is really good volume. 59,000 is not great volume. You want to get to that 500,000 to like feel like it's gonna like hold on. But still, I mean, out of those 59,000 shares, more people are buying than selling, which is what we got right now. 33.34, dude. It's not stopping. It's making 33.38. It's up 10% overnight. Holy shit, dude. Where's Robinhood overnight? Robinhood, Bitcoin's back at 55. Robinhood's at 19. So Robinhood just lost its pump. It was at 19.19. Now it's at 19 right now. Again, Robinhood overnight markets, there's not a ton of volume, but it does give you a little bit of action of what's going to happen. And I think it's got it right on Palantir. I think Palantir is pumping tomorrow, dude. I think S&P 500 inclusion is not something that just goes unnoticed by the broader market. So I think we pump. But how bad is the macro tomorrow? That's going to determine if the pump can continue to stay. Again, this was 32.71 after hours on Friday. Now we're at 33.34 on Robinhood. Where are you getting this price info? It is on a website called robinhood.com. They allow overnight trading. It's the platform most people use to see overnight trading of stocks. So that is where you go to get this information. But again, keep in mind the volume is low because it's not like the market is actually open right now. Okay, so that's what we got in the context of the jobs data. A couple of charts I want to show you guys in the context of macro as well. So 2 charts right here. Bankruptcy filings have plunged in the last month, which is nice to see. So if you look at the weekly bankruptcy filings, the light green is the 12-week moving average. The dark green is the 4-week moving average. You are seeing we're starting to come down. It was a bit higher it got the highest obviously in 2020. It was a little bit higher in the summer in July of 2024. And now it's starting to come down. So how do we interpret this? I think there's a couple things. One of the things that's really interesting about the bankruptcy filings in comparison to the jobs number is that one thing people missed out on is that although we have the lowest number of jobs available, 7.9 million, if you even believe that number is real, since 2021, a lot of people, the ratio I'm trying to say is a lot of people, aka the percentage of quits of the jolts. It's a little bit complicated of a number, but that's at a 2-year high, meaning a lot of people are quitting their jobs. And the question is, why are they quitting their jobs if we're getting into an uneven macroeconomic sort of situation? And I think part of the reason, there's a lot of cultural reasons, but one of the reasons maybe people are starting businesses, people are taking more risks. People are, and that kind of makes sense in the context of the bankruptcy filings going to their lowest levels because people are kind of trying to maintain their businesses as well. And you could also say that people have saved up enough money and made enough money because the markets have gone up over the past 2 years. Net asset values across households is at an all-time high. I think it's at like 145 trillion or something, that people are feeling more likely to say, hey, I'm going to quit my job and start something new. Busy in the chat as well. Contract jobs. That's also a very good point. I'm giving the bullish perspective. The bearish perspective is a lot of people have contract jobs and that's why they're quitting as well. But if you interpret it as more bullish and people are quitting their jobs to either travel or start a business or live off their savings, whatever it may mean, that's another reason why we're having some issues in the job market. A lot of people, I mean, based on the percentages of the people quitting compared to the JOLTS report, they don't want to work in corporate anymore, or they don't want to work their blue collar job, their white collar job. Oh, another stat we showed last week, I think it was on Thursday, or it was on Friday on the jobs report. The number of jobs that had the most or the least amount of hiring were white collar jobs. People like consultants or investment bankers, stuff like that. So that also signals to me that a lot of the larger companies are not hiring the people that sit in front of their computer every day because they don't see that much of a need for them, given the fact that A, maybe AI is replacing them to an extent, maybe too early to say that, but B, because if you're doubling down on what's working and you're trying to be a little conservative on your expenses, if you're anticipating some pain, then you're not going to hire people that, quite frankly, are probably not producing as much value for the organization as you think they are. And those people, theoretically, if they're getting fired, if they had juicy salaries over the past couple of years, 250 grand, 350 grand, and they've been saving a decent amount of that money, aka they weren't living in California or New York, then those people might be starting their own businesses. And if they're starting their own businesses and doing their own stuff, that could be another reason to explain unemployment. Now, that's actually a good thing. If people are starting their businesses, even though it's really tough to make a business work and they're making additional revenue, that helps GDP. They can start employing people, even if they're quitting the labor force. But yeah, I think it's still so unsure of like, is that actually happening or not? I think it's going to take a couple of weeks, at least months of data to figure out, is that true? Is that making sense? Or are people just like legit getting fired because companies are anticipating a recession? Nvidia's at 103.25 right now. So Nvidia's up. a little bit right here, up about 0.5%. And then after NVIDIA, back to Palantir, wow, we just fell to 32.80. Okay, so whoever bought that 33.50, 33.40 level, they're pretty mad right now because we just dropped to 32.80. We basically just dropped to the same price we were at on Friday. This is why again the overnight markets are tough, dude. You have volume of 74,000. Someone in those first 59,000 shares pumped this bad boy to 33, 34, like pumped up the bid, and then now the bid just completely went away. So we'll see. We'll see how this opens on Monday at 9:30. But right now here at 32.77. The good thing is that's still holding some of these levels. The rest of these stocks are also falling. Robinhood's back below 19. Bitcoin's barely holding 55,000. S&P's up a little bit. NVIDIA's up a little bit. Snowflake's down. Yeah, most stocks are still mixed on the overnight markets, not really showing a trend to the upside for everything. If we break 33, there's very little resistance after. Yeah, well, Jason was talking about this on the technicals. If we hold 33, or if we break it, the volume shelf resistance is going to get to a point of price discovery because we haven't seen those levels in 3 years. I mean, we haven't seen 33 since 2021, since like March 2021. So there's going to be the potential for a lot of buyers to step in and for the price to kind of figure itself out. But if the macro is also really crappy, then you're going to have probably a ton of people take some profits at those levels, especially people who brought in at 27, 28. They have a nice $5, $6 gain. They're going to take their profits. And so we'll see Monday at 9:30 where this opens and kind of how this ends up playing out. Fed member just said they are open to larger rate cuts. Yes. Waller and Goolsby were on CNBC on Friday, and they said, hey, we think we're like, they basically admitted, not even basically, dude. I mean, like they quite literally explicitly said it is time for the Fed to focus on rate cuts. Bostic said the same thing on Wednesday as well. So, I mean, I think it's obvious we're going to get a rate cut. That's not the controversy anymore. The controversy is 25 or 50, and how does the market react on 25 or 50? Here's another chart I want to show. So consumer spending is still solid. This is the daily data for debit card transactions across sectors. So you're looking at water, gasoline, food and beverage stores, and motor vehicle and parts dealers. And March in 2024, you had some stuff kind of go down. Then in August, you had some stuff go down a little bit more. But now as we're getting back into September, it's starting to normalize a little bit, which is not too bad. I think in general, this chart, along with the broader implications of the consumer, is something that the jury is still out on because there are just so many examples of companies that have said the consumer is fine. Lowe's said the consumer is fine. Home Depot said the consumer is fine. Uber said the consumer is fine. Lyft said the consumer is fine. Shake Shack said the consumer is fine. You have Lululemon and Abercrombie that both got crushed on earnings. By the way, one of the Lululemon C-suites just bought 1,000 shares of Lululemon on Friday. Both of them also, selling more higher end clothing. They said the consumer is fine, and they didn't blame the consumer for their earnings. And their earnings weren't horrible, but they were just a little bit shy of what the market expected. So a lot of companies, Affirm said the consumer's doing great. Affirm's literally a buy now, pay later company. The consumer's supposed to be horrible if we're heading into a recession. Oh, by the way, I was at Macy's yesterday because I'm traveling this week, and so I had to pick up some clothes. I'm at Macy's. Macy's, again, a retailer that has been struggling for a while. Their stock year to date also has been in a tough position. It pumped a little bit in January. Macy's stock year to date, it has to be down like 40%. Yeah, it's down 26%. Okay, so it's down a lot. Over the past 5 years, they're down 5%. Like, they really haven't done too much. Macy's was packed, dude. People were shopping. People were legit shopping. Like either all those people are maxing out their credit cards to get some clothes, which makes no sense because Macy's, you're getting clothes, right? Like most people have enough clothes. You don't literally need to go max out your credit card to get more clothes. And if you're doing that, you have a crazy, spending problem. But I think the majority of people were there because they had disposable income and they were spending. And then when you go to the broader mall, people were spending as well. So it's one of those things where it's like, dude, if the economy is that bad, I'm not seeing it in my personal life yet. My sister went to Costco. It was packed. Like it's just one of those things where, and we know Costco sales numbers came out on Friday and they crushed it. They're up 7% year over year. I know some people say Costco's a recession stock. I get it. But at the end of the day, you have people that are still spending, and earnings are a result of consumer spend because that means companies are able to put up the growth that is able to grow top line GDP, grow their bottom lines, and that allows the stocks to rise because companies and people start buying if earnings growth is stellar. You don't have a good stock market if you don't have good earnings growth. You don't have good earnings growth if you don't have a good consumer. And from what I'm seeing, the consumer is okay. Now, again, that's an anecdotal experience of me going to my local mall in New Jersey, seeing people spend. That is not something we can derive a conclusion from, but whatever fucking recession that people are complaining about, I don't see, at least in my personal life, dude, I don't see this recession. Like there are a lot of people shopping still, and maybe it's the calm before the storm, but it's one of those things where anecdotally you feel a little bit more of the pain if it's this like massive boogeyman recession coming, and it just doesn't feel like that yet. So we're going to see what happens. But my point on that topic about that chart about the consumer is that if the consumer is not horribly struggling, that's another thing the Fed has to figure out. We're going to get retail sales data, I think, in the next couple of weeks as well. Again, retail sales data in July was up 1%. It was amazing, right? Like it was a huge beat. That's also why the market pumped early in July. But the question's going to be, does that keep up in August? And I expect it to keep up in August. Like based on the research I'm looking at, I think retail sales is going to beat again in August. And if we beat again in August and we get a 25 bips or a 50 bips cut, which makes it easier for consumers to take out a loan, easier to get approved for buy now, pay later, easier to get approved for more credit cards, easier to finance a car. Theoretically, that money market fund, by the way, off that first cut goes around from, or first two cuts goes from 5.3 to 4.8%. We'll talk about money market funds in a little bit, but then you have people that have, invested money in money market funds. They're kind of going to be thinking about where do they put their assets as we get a rate cut, along with consumer spending being good, which means company earnings should still show growth. Like if consumer's good and company earnings are going up, you've got all this money market fund money that's not getting as good of a return as it was getting even 2 weeks ago. Now looking at the fact that, hey, if the consumer's good and NVIDIA and this AI revolution is happening, why the fuck is my money getting 5%? And I think that realization might create the tailwind that's necessary to get into the November, December rally after September, October seasonality. But obviously, there's a lot of different events in September and October that could cause the bearish headwind. And the biggest one is the election and how the market interprets the election, whether Kamala wins or Trump wins. I have no idea at this point how the market is going to interpret either or winning. I think right now, as much as people may say, well, Trump has got to win for the market. Dude, the market does not like these 100% tariffs. Trump came out today and he said, we're going to have 100% tariffs on companies that are not building their products in the United States, yada, yada. It's like, I don't know how much the market's going to love that. Now, Kamala wants to raise taxes by 20. Like I was reading some analysis. I don't know if this is correct or not, but there was one article that was saying the stock market has to fall 7% no matter what the day Kamala is elected, because if she raises corporate taxes from 21 to 28, then on average, company earnings are going to fall by 7% because they're going to have to pay more in taxes. I don't know if that's actually correct, to be honest. I was a little skeptical of it, but you've got a lot of people thinking, well, those tax cuts are not going to be bullish, or tax raises are not going to be bullish. But then you've got other people thinking, well, inflation is going to spike if Trump starts putting tariffs and starts a trade war with China. So, I don't know, dude. It's going to be so interesting to see how this ends up playing out. But right now, I think we got to get through these first 2 months to get into some bullish territory again, and we just kind of got to roll with the punches. Normally, elections don't affect markets after the settlement periods, after all the hype. That's also true. I mean, markets are very forgiving and they're forward-looking. Again, look at what happened with CrowdStrike, dude, right? They got punished and the market said, all right, fuck it, we're going to just buy. Same thing with Palantir. Palantir, back in 2022, it was hit for a while, and now the market's just like, why don't we have more Palantir? Like, markets forget really quickly when things go bad, and they start, as long as things don't keep going bad in Palantir, as soon as they became GAAP profitable, that $8, $10 rate. I mean, I was thinking about it this weekend. Palantir was $8 up until May 2023. Then they had GAAP profitability. They got up to $10. And then after that, it never came back down to $8 and $9. It just 11, 12, 13, 14, 15, 16. Then we stayed in 16 for a good 8 months. And then we broke out into the 20s. And it's one of those things where things just start progressing. So if Kamala gets elected or Trump gets elected, the market's eventually going to see past it. But for all of us trying to protect our 2024 year-to-date gains, we need the market to figure out what they think in November, December, so that a lot of us can take profits during that time and in January, and then reposition for 2025. Chad said, make sure you have a solid color shirt. I got you, Chad. I definitely, dude, I spent a lot. Dude, all right, so I'm just going to be honest. Dude, I dropped $400 at Macy's buying clothes. Now, you may be thinking, Mitt, why did you spend $400 buying clothes? Well, I don't buy clothes often. I'm not a spender. I actually went with my mom, and because we're also going to India as well, so I need to get some new clothes for India. And I just started like picking up shit. I just started picking up random stuff. I wasn't even checking the prices. My mom was like, "What are you doing? Like, you're not concerned about the price?" I'm like, I don't go shopping often. So when I do go shopping, I don't really care. I just want good quality. Like if the Levi jeans are $60, does that hurt me paying $60 for a pair of jeans? Like, yeah, I don't want to pay $60 for a pair of jeans, but at the end of the day, like, I'm not cheap. That's like, some people think I'm cheap. I'm not cheap. I don't spend often. Like, I'm not spending $300 on a sweater from Lululemon because it's a sweater from Lululemon. But if I really need a good outfit, or if I really need jeans, like, I'm going to spend whatever I need to spend and like, move forward, right? So I spent a decent amount of money on Macy's. I did get 20% off on a majority of the items, and I got 20% off for opening the Macy's credit card. So that helped bring down the bill. But the point is, I was spending, and I'm sure I'm not the only guy who was spending at the mall. I'm pretty sure a lot of people were spending, and it's because at the end of the day, some people have, enough disposable income to justify it. So at least from that perspective, we're going to see how the consumer spend ends up playing out over the next few months. So you won't be streaming in India? No, I will. I'll be streaming Market Open in India, but not Market Close. Market Close is going to be at 2 a.m., but not Market Open. I'll be able to do. It'll be 6 p.m. my time. But Market Close is just going to be tough. Maybe on certain days, Market Close will be easier to do, especially if it's like a big day. But yeah, it's going to be hard. I'm going to try to stream 1010 for Tesla, and I'm going to try to stream the Robinhood event. By the way, let's talk about Robinhood now because we didn't discuss them. A couple updates on them. But for the most part, Market Close will take a break in October, but Market Open should continue to play out. Okay, so a couple things on Hood. We got some Vladdy tweets. Why was Vlad tweeting on Friday? I don't know. But he was tweeting, and he was tweeting some good stuff. So he tweeted 3 things. Actually, 4 things. No, 3 things. Sorry, 3 things. So here's the first thing he tweeted. Kevin said, I bought a $450 Coach backpack yesterday. I feel guilty. Okay, see, Kevin, I love you, bro, but that's something I wouldn't do. Okay, I'm not going to buy a Coach backpack just because it comes from Coach, all right? That's like my mom, dude. She loves buying these designer bags and shit within her range. She's not shopping at Louis Vuitton, but she'll, like, if she gets a Michael Kors bag and shit, and I'm like, it's a fucking bag, dude. It's not like but like, if I need jeans, like, yeah, I'm going to get jeans. If I pay $60 for jeans, I'll pay $60 for jeans. But the other more luxurious stuff, it's hard for me. It's hard to justify that stuff. But if you got the disposable income, then you got the disposable income. There you go. So a couple things Robinhood, Vlad tweeted. So this guy, Income Sharks, a good account on Twitter, he says, over the next 10 years, we'll see trillions of dollars be inherited and people won't be using traditional banks to invest. They will use apps like Robinhood. There's a massive shift towards self-custody, and the days of paying for a financial advisor are limited with AI assistance. Vlad says it's happening. ... This to me is screaming, guys, we had a shit ton of deposits in August. Because look at the tweet. Over the next 10 years, we'll see trillions of dollars be inherited and people won't be using traditional banks to invest. Basically talking about the wealth transfer. I think Vlad saying it's happening is him saying, yeah, in August, we saw a shit ton of deposits. So that's one thing he said. Then Robin had tweeted out, but wait, there's more than one announcement coming on 10/16/24. And then Vlad tweeted with the eye emojis. That shocked me. I saw this on Saturday and I was like, oh, there's more than one announcement? Like, I thought there was 1 or 2 things, but like, it seems like they're pumping it up to say, we're going to introduce a variety of products. It's not just going to be, the active trader platform, which is what they did with the gold credit card. They had a bunch of products, even though people knew the gold credit card was going to be the big thing. I can't figure out what these videos mean. Like, I think these are candles and stuff, but like, there's different little hints. Like, I don't really know what this means right here. I don't know if anyone has a theory behind this, but they're definitely preempting with different announcements. And Vlad then quote tweeted them again, and he said legendary. And the theme of the event is the legend awakens. So I don't know what the hell Rob is going to introduce in October. I will be trying to stream the event when I'm in India, but I think it's going to be a big, big event. And if they can continue to grow 40%, have new features, and we get rate cuts, again, I think Robinhood's going to be a really good stock for the rest of the year, but we'll see how that ends up playing out. It is a 3-day event, correct? It's literally 3 days in a row. So I think there's going to be a lot of stuff they introduced over that event. Some people are saying AI. I don't think it's going to be any AI stuff. I think they acquired Pluto, which is their AI, like a LLM company, like 3 months ago. I don't think they've done enough like R&D to launch a full-on AI product, like a financial LLM robo-advisor. I think 2025, that's the goal. But if they do, then maybe they were more ahead than what everyone else thought. And, they're going to launch some more stuff pretty soon. So we'll see what happens with Robinhood, but that's the update on them. And I think October 16th is going to be a pretty strong showing for them. All right, couple of other charts that I wanted to look at as well. So we looked at fear and greed. We looked at consumer spending. We looked at bankruptcies. We looked at credit debt. We do have CPI this week again. Let me see if I have a couple of other charts. And then I do want to talk about some stuff with Tesla as well, because Tesla had such a great week, but then the jobs report just kind of got them hit. Oh yeah. So one quick thing is we did have the uninversion of the yield curve. Let me check if it's currently reinverted. So the 10-year right now, this is from Friday, is 3.74. And then the 2-year is 3.65. Okay, so they uninverted, which is bullish, but the problem is it's more likely than not they're going to reinvert. And from that reinversion, after the uninversion, you tend to get a little bit more pain in the macroeconomy and tend to see a little bit more of a sell-off, along with USD JPY not being at the best levels, given the yen is starting to strengthen. So that's something we have to look out in the context of the macro, and the 10-year and the 2-year. And kind of signaling, hey, we kind of think there's going to be a recession. Now, again, the point I made on Friday is that they've been signaling there should have been a recession for 2 years, but tech earnings were so strong that I think it combated the 10-year and 2-year. Also, we printed trillions of dollars and raised rates the highest we've raised them, or the fastest we've raised them in 40 years. I do think there is an argument that because we did two things that were anomalies in 2020, that it led to a lot of wonky economic data. And it led to certain indicators that have historically been correct to not be correct. Now, that doesn't mean they're not going to continue to be correct, or there's not going to be a certain time period where they're off on a little bit, but it just led to a lot of weirdness. And I think that weirdness is now going to have to play itself out over the next, basically over the next few weeks to see what happens. So I want to hear a little bit from Tom Lee. I was going to play this clip. I know some of you guys might have heard it, but for those that didn't, this was his perspective on why markets fell and why he thinks the front loading of the bearishness has happened. Let's hear from him for 2 minutes, and then we'll move on to a couple of other charts.
Tough, and I wonder if markets are going risk off early.
So you believe in the soft landing story. You said there's no fundamental reason for this. This is a debate over soft landing versus something worse. Market seems to be tilting towards something worse. You say no.
Yeah, the reason I don't think it's something worse, and we don't know, is that the jobs added was better than July. Remember, July was the hard landing fears because it was such a weak number. And in fact, the number of industries adding jobs jumped to 53%. That's the best in 6 months. And the unemployment rate fell. So I think we're at a point where the Fed could engineer a soft landing. And that's why 2 weeks from now, it's going to be important.
50, 25, does it matter to you?
I think it's going to be how the market interprets either number, because there can be such thing as a dovish 50 or a hawkish 50 or a panicked 50, even a hawkish 25. So I think the reality is the Fed is on a cutting cycle. That's really a good catalyst for rotation. Interest rates are going to fall, and it's going to help industries like housing, autos, credit cards come out of this recession. So I think it's good news when they start cutting.
Okay. What's happening in tech? We said that
and again, that's the question. Like, it is a good news when they start cutting, but does the market interpret the cuts as strength or weak, like into strength or into weakness? And I think everyone's still confused how the market's going to interpret even a 25 bips cut.
NASDAQ's down more than 5% this week. We're having the worst week in about 18 months, and the tech sector itself is off more than 7 on the week. What's going on with that trade?
Tech, I think, revealed its hand last week because NVIDIA had a good number, but it fell. So when stocks fall on good news, it's either a crowded trade or something bad could be coming. And then, of course, they've led the downside this week. I think it is part of this pull forward the seasonality because people.
Oh, fuck, guys. I think we got some bad news. Yep. Japan just fell 3%. Oh boy. Oh boy. Oh boy. Oh boy. Japan just fell 3%. Japan just fucking fell 3%. Oh, that's not good. That's not good. That's not good. That's not good. The yen is still a little strong right now. The yen, yeah, still at 142. Fuck. This is the only thing we could say, dude. All right, let's finish Tom Lee, then we'll get to Japan. We'll see if I can get some more coverage on that.
I want to de-risk, and tech is a big holding, but I think on the margin there could also be a political aspect to this. Trump's probability of winning actually increased this week in the betting markets and in the polls, and I know investors think he'll be tough on China, which would be bad for semis. So I think part of this could be fears that a Trump gaining is bad for semis.
What if there's just too much priced into these stocks at this point. Valuations have gotten a little too rich, even if they're the greatest stocks in the world, which you've made the argument that in fact they are, that this is the place you want to be, maybe more than any other. And what if that's true and the multiples still don't make sense?
I think it's possible. In NVIDIA's last 10 years of history, there have been 30% drawdowns, almost 8 times of similar magnitude. Its PE, NVIDIA's forward PE, was actually higher at the bottom of those drawdowns. Right now, NVIDIA's forward PE is in the mid-20s. So to me, this looks like a normal profit taking. Maybe it takes NVIDIA down to the 90s, but I think 2 years from now, that's really going to be a gift.
So when you
Okay, we'll finish Tom Lee in a second. He was talking more about tech, but this is really weird, guys. Futures are green even though Japan is down. The futures outside of small caps, but fuck small caps. We don't care about small caps. The Dow, the NASDAQ, and the S&P are up, but Japan is down. Why is that happening? And the VIX is down. The VIX should be up. If Japan's down 3, again, this is not a stock that's down 3%. Japan, the country, is down 3%. The VIX should be spiking, at least going a little higher. Why is the VIX? What the fuck is going on, bro? Yeah, Japan's definitely down 3%. That's not wrong. It's down 2.9%. Crowd control says just roll with it. Dude, we got to figure out why this is happening. What is going on here? Let me see if let's see if Bloomberg's talking about it. What is going on here, dude? This is kind of wonky. This is not like if Japan's down, futures should be down. Is Bitcoin up? Bitcoin's up too. So why is Japan collapsing? But like tech is doing fine. No, they're talking about the election on Bloomberg. Amit, just leave it. That's literally not my job to just leave it, dude. My job is to make sure I have an understanding of why this is happening. Dude, what is this, bro? This doesn't make any sense. Maybe this is a flash crash in Japan and that's going to go away pretty soon. But this doesn't make any sense. This makes like no sense. Japan is just catching Friday. Yeah, but then why are futures up? Because Japan catching Friday should be compounding the bad news. It shouldn't be sending futures higher. We should not be seeing this green right now on futures. And we definitely shouldn't be seeing Bitcoin go up if Japan is down because a lot of people engage in the yen carry trade to buy some Bitcoin. Which means they should be selling their Bitcoin theoretically. This is weird. This is very, very weird. The BOJ did say last week, they said some stupid shit, dude. The BOJ was like, oh, we reserve the right to like raise rates if the economic conditions get better. It's like, dude, shut the heck up. No, you do not reserve the right to raise rates. You're not going to raise rates. You know you're not going to raise rates. I don't know why they came out and said that, but they tried to make some headlines last week. That's probably what kind of hurt the Nikkei because the yen started pumping on that news. That's why the yen is at 142 versus 147. But I don't know if that's enough to take Japan down 3%. Oh, hold on. We got some news. So Japan second quarter GDP grows 2.9% on an annualized basis. The estimate was 3.2%. That's why Japan is down. That is why Japan is down. They missed GDP estimates. So I don't think it has to do with the yen carry trade. That's why U.S. futures are green. If it had to do with the yen carry trade, U.S. futures would be down because people will be selling off tech. They're not selling off tech. This is just Japanese people and hedge funds literally selling off the index because Japan's not growing as much as they should be growing. Okay, that's okay. That's actually reasonable. That's actually a good explanation for why it's down. Okay, I'm happy we figured this out because this made no sense for Japan to be down. It's still falling. It's still falling right now. It's not recovering. Okay, so Japan is down because they missed on their GDP estimates. U.S. futures are up because honestly, I don't know if there's a correlation between Japan going down and the U.S. going up. Well, one of the reasons, just off the top of my head, people are selling off the Nikkei to buy tech. People are. This is the point I made on Wednesday or Tuesday before NVIDIA earnings, which is that the majority of the world is invested in the United States of America. The majority of the world is, that's why NVIDIA earnings was such a big deal, because the Saudis, the Japanese, all these people with big, big money. By the way, Kamala Ann Trump over the weekend said the United States should have a sovereign wealth fund. I thought that was very interesting. But all of them are invested in American tech companies because at the end of the day, where else are you going to put your money? Where else are you going to put your money? You're going to put your money in the U.S. So the reason people are selling off Nikkei right now, but futures are green, is because they're probably rotating that money into U.S. equities right now. I mean, when Japan just fails to grow pretty much every quarter, and it's not really just their fault. They have a population crisis, all this stuff. They've kept interest rates low for so long. It's not like the incentive isn't there to start a business in Japan. But Japan just doesn't have the types of companies that are being built in the United States. That is what obviously is going to create lack of innovation, lack of jobs, and money's going to rotate back into the United States. That's why we kind of got to keep the United States on top, because if money stops leaving the United States, where else is it going to go? Then it's like we have nowhere else to see money compound and have innovation be thrived. But it seems like that's what's happening. It seems like Japan is down simply because of that GDP miss, and that's why U.S. futures are up right now. That's probably why Bitcoin's up. People are selling the Nikkei to buy Bitcoin as well. Money market funds, we talked about this on Friday, but for those that missed the headline, $6.3 trillion is now on the sideline. We have added over $170 billion into money market funds in the past 5 weeks, $37 billion last week. Retail has $2.5 trillion of that money. Institutional investors and the Amazons, Googles of the world that have their cash reserves, all that stuff, they have $3.7 trillion. So it's a decent split between retail and institutional. That's money that theoretically could be in the stock market. I'm sure plenty of people watching probably have some money in money market funds. And the question is going to be, at what point does the cut incentivize enough people to take money out of those funds? And are people waiting for a really, really juicy dip, like 10, 20% down in the US stock markets to finally get money out of the money market funds? Now, by the time US funds fall 10, 20%, if it's a gradual decline, not a like flash crash, I think rates would be cut by 100 bips by that point. That's historically what happened in 2000 and in 2007. But and then money would leave money market funds. That's why 2009 we had 500 billion leave money market funds to get back into the S&P after the S&P fell 27%. So it was people basically buying the dip all the way up. The question is going to be, does that continue this time, or do people get in even if we fall 5 or 6%? If not, if we don't fall 20%. But we got a lot of money in those money market funds. Any big earnings this week? Let me see. And then I have one more topic I want to talk about, and then I'll get you guys out of here. So earnings this week. No, we have nothing. Oh, we have GameStop on Tuesday. So I guess, we have Oracle on Monday. Dude, Oracle's going to be big. I showed you guys this on Friday, but might have went under the radar. I think Oracle is going to have a hell of a quarter, dude. So Oracle will be tomorrow. That's big. That's in the morning. That's big. Maybe they mentioned Palantir. Who knows? We had Microsoft mention Palantir. Lowe's mentioned Palantir. That would be crazy if they mentioned Palantir. And then we have GameStop. GameStop's call is going to be so stupid, dude. I don't even think GameStop's going to be a call. They're going to put some stupid press release and be like, we have $4 billion in cash. We're executing against our opportunities. Thank you for being investors. That's all that GameStop's going to say. But Oracle's going to be important. So this is from Oracle's earnings last quarter. This is what the CEO said. In Q3 and Q4, Oracle signed the largest sales contracts in our history, driven by enormous demand for training AI large language models in the Oracle cloud. I don't think this has changed in the past 90 days. The record level sales drove RPO, remaining performance obligations, up 44% to $98 billion. That's not easy, bro, for a company that's worth $400 billion to have $100 billion in backlog, up 40% year over year. Like, that's crazy. And then they said in Q4 alone, Oracle signed over 30 AI sale contracts totaling more than $12.5 billion, including one with OpenAI to train ChatGPT in the Oracle cloud. I would imagine if OpenAI and Meta are coming out with Llama 5 and GPT-6 and all this stuff, then you're going to have a lot of more training. And so you're going to need some of these contracts with companies and hyperscalers for cloud computing infrastructure like Oracle. And I think they're going to show really good growth. Now, Broadcom showed really good growth as well. Broadcom got punished. I think Oracle might get punished as well, just because like the market's kind of shitty right now. But I think Oracle earnings are going to be huge, and that's really good to kind of keep an eye on that for the general AI thematic in general. Most devs don't like Oracle. I have heard this as well, but a lot of people use Oracle, dude. Oracle, how many employees do they have? I think it has to be over 100,000. Oracle's a big company, bro. Oracle has 159,000 employees. It's a lot of people, dude. PE is 38. They have a dividend of 1.1%. Market cap is 400 billion. So bigger than Salesforce by about 1.5x, and then bigger than Palantir by about 6x. And I think, the people say software companies can't get to really, really high market caps unless they have a consumer product, which is fair. The $1 trillion ones have a big market cap, and people, tend to compare Palantir to Salesforce. I think the actual comparison is Oracle. I think Palantir is more Oracle than it is Salesforce. You could say it's more Salesforce because they sell like a product, and like that product is a platform, like a CRM, even though it's not literally a CRM. I get it, but I feel like they're as important as an Oracle, which is more important in my opinion than a Salesforce. And I think their trajectory and their TAM is just bigger than a Salesforce. So I think, one day the Oracle is a perfect example of a company that has a market cap that's pretty large, even though it's not in the trillions, but it's a SaaS company and it still is able to produce, close to $500 million in market cap. And so I think Palantir could probably take after what Oracle might do. Roaring Kitty said, talk about the Roaring Kitty thing. So the Roaring Kitty thing was stupid. He basically put out this tweet that it was a meme that basically, in my opinion, says he dumped Chewy, which if he did, then it's so stupid, dude. It's like, it was fun covering it in when it was breaking out, like in June or in May 14th. But I think the guy's full of shit, dude. I'm sorry to the people that love Roaring Kitty. I think he's just so full of shit. Like, this is so dumb. This is so dumb. Like, now he's out of Chewy. Like, if I was in Chewy just because of Roaring Kitty, I would be so upset. This is like that I don't want to play with you meme. So I think he's basically saying, I don't want to play with you anymore. He replaced Woody's face with the Chewy logo, with the dog. And so I think that's him saying, I'm selling Chewy. Now, does that say he's going back into GameStop? I don't know. Did he ever leave GameStop? I think so, because I don't know how he has $400 million to invest in 18 million shares of both companies. But if he's going back into GameStop, then the question is, what's the catalyst for GameStop? Like, I think it's just so dumb, dude. After like really investing in a company that matters, like Palantir, and then another company that's on a great trajectory like Robinhood, you start to see some of this shit, and you're just like, this is so stupid, it's so dumb. And I'm so happy I didn't engage in those trades. I don't blame anyone that did just for fun or as a gamble, but like, I don't know, dude. A significant amount of money into GameStop. It's just like not. It's like you're just buying it to buy it at that point. There's nothing real backing it. Now, Chewy actually is a really good company. They had good earnings this year. It's just they became a meme stock after Roaring Kitty bought in. But maybe they get back to being a good company, and people just care about their earnings, given he's potentially out of the stock right now. Some made millions. Yeah, that's amazing, dude. I look, if you made money off GameStop, AMC, I have no problem with that. Like that's amazing. People make money off meme coins all the time. But there are some people that legitimately believe in this like long-term beautiful thesis around GameStop, and I'm just like, why? Like, the company gives you zero reason to care about what they're doing. They basically give the middle finger to shareholders. They dilute like crazy, and then when on the investor days, Ryan Cohen says a pre-written paragraph and then goes to bed. Like, it's just a hodgepodge of nonsense, but you got a lot of people that believe in it. Some lost millions, correct. Some lost millions as well. Thank you for Barry Cassaday for becoming a channel member. Appreciate it, Barry Cassaday. That last name, Cassaday, that's a cool name. Thank you, Barry Cassaday. Really appreciate it. Thank you for becoming a channel member on the channel. Okay, cool. So last thing I want to talk about, and then I'll get you guys out of here. For those that are just joining, basic recap going in tomorrow. Right now, the Nikkei is down 3% because Japan missed on their GDP estimates. U.S. futures are up because people are likely selling off the Nikkei to buy U.S. tech stocks. And tomorrow is going to pretty much be the first day after a bloody Friday, one of the worst Fridays of the year, where the market's going to have to say, hey, do we want more pain? Do we want to keep this going? Or do we think the jobs report was good enough, even though we know there's going to be negative revisions, to start pricing in an aggressive rate cutting cycle by the Fed and essentially buy the dip? We're going to see. Either tomorrow the market says, all right, it's time to buy the dip. We're stepping in when NVIDIA is 100, or they need NVIDIA to go down to 94, 90, 85 to buy the dip. I think this week is going to be that week of reckoning for the market. And we'll see if the Tom Lee thesis about pulling forward that bearishness is correct, or if there's underlying issues that should keep investors bearish for the rest of the month. But 9:30 a.m. tomorrow, we'll see what happens. Okay, so last thing I want to talk about is something that I did some research on yesterday. Some of you guys might have seen my tweet about it, but I want to bring it to your attention. I don't really have an opinion on it, good or bad, but a lot of people on the responses to this tweet, which, by the way, Elon Musk liked the tweet today. So we got into Elon's feed, and this tweet has over 1,000 replies. So obviously it struck a nerve with some people. And it wasn't a controversial take. It was kind of just like me recapping what I did some research about, is Social Security. So I have never gotten a paycheck from a real company. I've never worked at a real company. So I didn't really know what Social Security was, to be honest. I knew it was a tax, but I didn't like really know what it was. And last night, for some reason, at 10 p.m., I start fucking researching Social Security. I don't know what came into me, but I was like, what is Social Security? And then I just started I just became a fucking LLM. I started training my brain. I was like consuming so much data. And then before I went to sleep, I wrote up this summary. When did I post this? I posted this at 1 a.m. Dude, literally last night, bro. This is literally last night from 10 p.m. to 1 a.m. 3 hours. I studied this shit. And then by 1:06, 6 minutes after my 3-hour deep dive, literally from 10 p.m. to 1 a.m., I'm like, I feel qualified enough to write a summary about Social Security. So that's what I did. And this is the conclusion I came to. I think this will be really interesting for people that might not know too much about Social Security. For other people, I'm curious what your thoughts on this are. So everyone pays around 6%, 6.2% of their paycheck to Social Security. Now, your employer matches that with another 6.2%. So technically it's around 12, 13%. And that money is not literally you paying. It's your employer paying. But theoretically, economists have said that money could be going back to you in your paycheck. So technically it is you paying. But the point is you have to pay like a decent amount, 6 cents of every dollar, 10 cents of every dollar from your paycheck into Social Security tax. The idea is to use the funds from the workers that are paying that 6% right now and distribute it to those who are retired. So someone who's 70 years old right now, who's getting a Social Security check from the government, your 6 cents out of every dollar is leaving to give to that person theoretically. And that's how we're funding the entire program. And this was created back in the 1950s, I believe. The problem, and this is where it got juicy, is that we had a surplus reserve of $2.9 trillion until 2021. In 2021, a lot of people started quitting their jobs, which meant the labor force started going down, which was bad because if you have less people in the workforce, you have less revenue for Social Security. And we had a global pandemic, so a lot of people started quitting. So we had all that stuff happen. But we started tapping into that reserve. And the problem is 20% of the Social Security check that 70-year-old theoretically gets is now coming from the 2.9 trillion we have in reserve. So 80% is coming from the 6% that people pay every month or every 2 weeks. And 20% is coming from the reserve. And baby boomers are retiring, so you have less people in the workforce. If you have less people in the workforce, you have less revenue for top line Social Security. So I found out last night, this was flabbergasting to me. I don't know if I used that word correctly, but I was flabbergasted when I saw this. By 2033, a mere 8 years away, or 9 years away, we will run out of that 2.9 trillion. We will have no more money in this fund. So either we need to raise the 6% Social Security tax, or we need to reduce the benefits that people are getting. These are the two most controversial initiatives. They're probably going to have to be both happening at the same time to be able to fund this thing. But something's got to happen to be able to resolve this. Now, here's the part that broke my heart. This is the part that broke my heart last night. The most heartbreaking thing I learned is that Bill Clinton advocating for putting the reserves into the stock market in 1990. He wanted to take the $550 billion at the time and just dump it into the S&P 500. And he proposed legislation. I believe Bush proposed this as well. And Congress, the House of Representatives, and the Senate, they came together and they said, no, it's too risky. We're going to put it into T-bills. If we had put it into the S&P 500, we would be up over 300%. The S&P 500 at the time was like a 140. Now we're at 560. So we would have been up a decent amount. We would have had close to $10 trillion inside of the reserves of Social Security. Now, obviously, there would have been more risk because you would have had to deal with 2008 and all these different like moments where the market completely collapsed. But if we believe in America, then we would have bet our elders' futures on American innovation, the Microsofts, the Amazons, the Nvidias, the Palantirs of the world, versus America's debt via treasuries. We picked debt. That's the problem. We picked debt. And so now if you put the current reserves into the stock market, you would not have enough time to compound meaningfully to add to the reserves until 2023. So that's like not really that popular of a decision anymore. So the question remains, how do we solve for a fund that is widely popular? If you look at the polling on Social Security, I mean, it's like 80%. Most people love Social Security, even though a lot of people hate paying the tax for it, in a way that doesn't massively raise the payroll tax or reduce benefits for Social Security recipients or raise the retirement age. If you guys remember in France, they literally like burned down Paris a couple months ago because they said, hey, why don't we raise the retirement age? No one wants to raise the retirement age because that means you don't get your benefits until you get to a certain age. Right now, I think the retirement age in the United States is 62. Some people say, hey, what if we put it at 68 or 70? But that means you're going to have to be working for longer. And obviously, when you get to that old age, like, you want to have your glory days, right? You don't want to be working just to like get a paycheck. So it's a very hard problem to figure out over the next 4 years, but legislation will have to be passed for Social Security from some perspective to kind of deal with this. So I'm curious, what are your guys' thoughts on this? What are your guys' thoughts on this? What do you people think is the best way to kind of resolve this? Amit, you won't watch a movie, but you will research Social Security. You want me to take it a step further, dude? I fucking turned on Lord of the Rings last night on Amazon Prime. I was like, you know what? I should finally start watching it. And I turned it off after 10 minutes. Not because it was super boring, but just because like I just like couldn't focus, and I started researching Social Security. It was like I could have finished the movie. I could have officially became a Hobbit. But I said, you know what? I'll watch this later. I'm really curious about Social Security. So that's just who I am, I guess. But yeah, I went through a deep dive last night, dude, and I was just like super into it. So my question for you guys is, what do you think is the solution here? Because the clock's running out on this. Like, the clock's running out quickly. In 9 years, if we don't have that 2.9 trillion, either people are going to get less benefits, which sucks because there's a lot of elderly people. By the way, this is the part. So a lot of people, when the post started getting some responses today, the majority of people, I would say 80% out of the replies, were Social Security is a Ponzi. And you can agree with that, disagree with that. But the fundamental problem people have with Social Security is that you are contributing money. And I called Steve today. I told him about this. Guess what he said? He also believes it's an absolute fucking Ponzi. But you're giving money to the government with the idea that you're going to get it back when you're older. So it's like, hey, take some of this money now, pay me back later, and kind of have this guaranteed fund that when I'm in old age and I'm like having some issues, I know I have a check coming from the government, because obviously I won't have a check coming from an employer because you're not going to be working. You're going to be retired. The problem is the majority of people that saw the post today and that were responding to it said, which is a very valid claim, why can't I manage my own money? If you take that 6% that you're getting and you just put it into the S&P 500, you even compound it at 3 or 4% a year, forget 7 or 8 or 10% or 20%, you get 3 or 4% a year, you can make a lot of money on top of that money during your working life versus giving it up to the government and then barely getting the percentage that you gave to them back, because the way they calculate it, it's a very complicated way. It's based on the hours you worked and the certain threshold you had, your minimum wage, your salary, the number of years you worked. Like they're like, I watched the video breaking it down. I can't even explain it because I don't fully understand it, but you're not getting back the full amount of money that you gave during your working years. And so a lot of people were like, well, this is an absolute Ponzi, because if the whole idea is to protect me when I'm retired, if I can take that money and invest in myself or just put it into the stock market myself, then I will be set up for retirement, just like what I'm doing with my 401k. I know. So that's called a 401k, correct? So basically most people are saying, why can't we contribute more to our 401k? That's the argument that I got on Twitter today. And I think that's a fair point. That's what Steve said. Dude, Steve pulled up his like numbers to me. He's paid a lot of money, dude, in Social Security tax this year. Also, I realized I've been paying Social Security for the past couple of years. I don't even know I've been paying it. So I have an LLC. I've been paying 15.3% self-employment tax. I don't really know why it's 15.3%. 13% is, or 12.4% or whatever is Social Security, because I'm the employer and I'm the employee. So I'm paying the payroll and I'm paying like theoretically what I would be getting if I was an employee of the LLC. And then I'm paying 2.9% Medicare tax. So I've been paying the Social Security tax as well, even though I haven't gotten like a paycheck that deducts it. I just deduct it out of my gross net income for the year. But everyone's been paying it. So theoretically, that 12%, if I was able to keep that money and just put it into the markets, I would be compounding that way better than, you know, what the government's doing with it, because they're putting it in T-bills that are barely giving you 4.5%, and they're definitely going to start giving you less than that as we cut rates over the next 2 years. It's a very, very, very interesting conundrum to deal with. Rodney says it's by definition a Ponzi scheme. New entrants pay the benefits of old entrants. That's literally the definition of a Ponzi scheme. That's what a lot of people said today. A lot of people were basically saying, why am I funding someone else's life if the whole point of this is for this to be a social safety net for myself? Why isn't it being used in a way that's guaranteed to come back to me? So the solution that Brad Gerstner talks about, I watched a podcast with him with Scott Galloway this weekend as well. That's another thing I turned off Lord of the Rings to watch. I know, it's just like I can like stare at a 3-hour podcast and be entertained, but like when it comes to a movie, I'm just like, I can't focus. I think this guy is one of the smartest guys on the planet when it comes to this issue. His solution is very simple. In summary, he says, hey, as soon as a child is born, give them $1,000, put into the S&P 500. By the time they're 50, that'll be $1 million. By the time they're 30, it's at or the time they're 18, it's $50,000. They can't touch it. They're not able to pull from it. They can't do a loan against it. But think about the amount of financial literacy that would be created if you're in high school and you have a net worth of $30,000. Because America bet on you when you were born. They gave you $1,000, made an account for you right when you get your social security number. You weren't able to touch it, and it just grew with the S&P 500 through all the ups, through all the downs. If you bet on America, then you're betting that $1,000 will appreciate. Theoretically, you would have $1 million by the time you're 50. Boom. That kind of solves the social security problem. That is one argument. Now, Brad Gerstner was very politically correct. He was like, look, I'm not saying this should replace Social Security. In my head, I think he's absolutely thinking this is going to replace Social Security because he knows that day is coming and like somewhere we're going to have to figure out that solution eventually. But we have 3.7 million accounts we could make in America every single year. That would be $3.7 billion, $1,000 times 3.7 million for all these new children. I mean, $3 billion, dude. We spend $3 billion doing the dumbest shit every other day. $3 billion is nothing. And theoretically, that means someone who's working would not have to pay for a kid who's born next year who gets that $1,000 in their investment account, because by the time that kid is 50 or 60 and they're retired, if they haven't touched that account and America has not collapsed, why do you need some random dude working at Meta to pay 6% of his Social Security, of his paycheck biweekly to fund your retirement, when America funded it with $1,000 and the first 30 years of compounding that is missed because most people don't start investing until they're 30 actually starts to get to appreciate, and you have this nest egg, this reserve of $1 million by the time you're 60, and you don't have to worry about an $1,800 paycheck from your Social Security reserves when you're 55 or when you're 65. I think that's a hell of an argument, dude. Golf Channel says, great idea. If only we'd had it ourselves. Yeah, dude, if I was in 1997, when I was born, if I had $1,000 net worth as soon as I was born, and it cost America $3 billion to do that for every kid that was born in 1997. I mean, $1,000 into the S&P in 1997. I don't even know what that is today, but I imagine that's a lot more when the S&P 500 was whatever it was than it is than it is just sitting in T-bills, or if I never got that $1,000 in the first place. And America, if you're going to inject liquidity into anything, because we spend so much fucking money, why not inject it into the stock market? That $1,000 that I could have had as soon as I was born, if this was a real thing, I would have owned a part of Microsoft, a part of Apple, a part of Google when they were just getting started, a part of Intel. Maybe that wouldn't have returned that much given what's going on with Intel, but I would have owned the greatest companies in America as a 0 day old, as a newborn. And I would have a net worth that is significantly higher right now, just given the fact that compounding would have happened. And I wouldn't even have to touch it. That could literally be a safety nest. So I think that's the best solution to the problem. I don't think America has the political will to get rid of Social Security and say that this is going to be the solution, because it would have to phase out over time. Because obviously the people that are retiring, you would still have to pull from the fund to be able to give it to them. But for every new kid that's born after the next 10, 20 years, you wouldn't need Social Security taxes, because those kids would have money because it compounded for the first 30 years of their life. And it would grow until they're 65, and they would have 65 years of compounding. We all hear Warren Buffett say compounding is like the eighth wonder of the world. There you go. I can't see any downside to doing that at all. So I don't know. It's going to be a very complicated thing. But it's going to be tough to see how this plays out. June says, what about the people who live their lives paycheck to paycheck that can't invest any extra they get? That's a very good point as well. I mean, that's a valid concern. People who live paycheck to paycheck, they don't have any extra money that they're able to invest or put into different reserves. So it's a very complex, it's a nuanced issue. Originally, it was created in 1950. I think, Roosevelt, he's the guy who launched it. And the reason he launched it was because we had a lot of people that were dying early. There was a lot of disabilities. Originally, it was only for people with disabilities and like different mental health issues. And then eventually over time, it was so popular, obviously because people were getting these checks while they were retired without having to work, that the program kept expanding. And then you got into the business of health insurance with Medicare and Medicaid, and it got bigger and bigger and bigger. And then you have this big line item on the balance sheet of a couple $1 trillion that the government's spending on Social Security. It's the biggest, it's one of the biggest taxes that everyone has to pay in their paychecks. And you start realizing, holy crap, this thing has gotten really big. Are we actually getting any benefit of it? And if we're not getting the benefits of compounding into American tech companies by injecting liquidity into the stock market that's helping prop up those companies that are, putting up the numbers and the results and pushing America forward, if it's literally just financing debt for the United States via T-bills, like what the like what is the point of this thing? So I'm not saying Social Security is horrible. I'm not saying it's bad, or I'm not saying it's amazing. I'm saying there's a lot of nuance here. There's some people that think it's a Ponzi scheme. There's other people that think it's the greatest thing in the world because we need a way to fund people that are in retirement, which I agree. We need a way to fund those people. It's just, I think we need a new paradigmatic way of thinking. How do we fund those people? And if we thought about it the way Bill Clinton thought about it, which is, hey, let's put it in the markets and let's get the return and use that to fund those elderly people, maybe that would have been a better way to not have the Social Security reserves basically start to run out in the next 9 years. So that's the research that I did over the weekend, and that's what I figured out. Jack says the government doesn't want a logical solution. Their job is maintain the hierarchy and keep as many people poor and uneducated as possible. Yeah, I mean, the fact that we couldn't agree on putting the reserves into the stock market to me in the 1990s is like mind blowing. Like I was talking to Steve today. I was like, can you see any reason why that's wrong? And he's like, Steve's proposal was actually even more conservative. He said, hey, what if we only took 20% out of that money and we put it into the stock market? So now when we go through 2008 or 2022 and everything crashes and, you think like, oh my God, Social Security reserves are running out. By the way, those reserves are meant to be reserves for a reason. You're not supposed to pull from the reserve. So everyone's like, oh, well, if you put the money into the stock market crashes, the reserves are done. It's like, no, you just let it sit there. You buy the dip, to be honest, and you let it play out. Like, you're not supposed to be taking money from the reserves to pay for Social Security in the first place. It's a reserve for a reason. It's like on the rainiest of rainiest days, we pull from the reserve. We started doing that in 2021, and now the reserve is running out. And I found out today Congress is starting to borrow from the reserve, or they've been borrowing from the reserve for the past couple decades, and they've been financing other weird things, and they've been doing financial loopholes. So like the reserves aren't even fully reserved for Social Security. So it's just a hodgepodge. It's just a mess of how the government conceptualizes it. But even if we had put 10% of that money, 50 out of the 500 billion into the stock market, that would have appreciated over time. And obviously that would have been, a lot better in terms of what we can use for that money today. So I guess we'll see how it plays out. Chad said, imagine if we had Nancy invest for us. Okay, so let's end off the show on this. So Nancy Pelosi was actually just asked a question today. Here's this clip. It just broke. It's a minute-long clip. And someone, I think she's at a book signing. I don't know what she's doing, but someone asked her a question. Here we go. Oh, why does this audio suck? Hold on. I found a better one with better audio. Okay, this audio is a little bit better. Here we go. Here it is.
For Donald Trump to actually spend the rest of his life in prison. That's the only hope for democracy. Win the election. We do. Well, Nancy, listen. Last question. What stocks should I buy? Nancy, you're the greatest options trader of all time. I just want to know what stocks I should buy. But I just want to know, like, income inequality is their biggest concern. Already. The police are an institution of white supremacy and racism. I don't understand why they're even here at all. They should be defunded. I just want to know. She makes 6 figures a year in Congress and has $100 million net worth. Don't y'all want to know what stocks she should buy? Come on. No way. I just want to know. I want to know what stocks to buy. I want to close the wealth gap. What's the problem? No way. I just want to close the wealth gap. Nancy Pelosi, she's the greatest options trader of all time.
All right. You can agree with me or you can disagree with me. I fucking love that guy. I love that guy. It takes some balls to go up to Nancy and to confront her on the fact that she has such a high net worth. She cares so much about income inequality, and she's like built this net worth off obviously illegal insider trading. Like, anyone who doesn't think she's done illegal insider trading has no idea how she's been able to create this wealth. And straight up ask her, hey, what stock should I buy? Like it's not, obviously she wasn't going to answer this question. This is sort of a concept that John Baudrillard talks about in his book around hyperreality. He's a philosopher that talks about confronting the absurdity of hyperreality. And the concept here is you ask a absurd question philosophically that has no answer to the question, but the question itself is a question that sort of implodes when you ask it. And so when you ask the question, it makes no sense, but the point of the question not making any sense is that it makes sense to ask the question because it makes no sense. And so the whole point of his question right there, metaphorically, is like, hey, what stock should I buy? Implying the sort of assumption here is like, hey, you're rich. You've gotten rich off of illegal means. You should know what stock I should buy. So why can't you give me an answer to that question? Now, you may be saying, well, why won't Nancy answer that? Or, of course, Nancy shouldn't answer that because that's inappropriate. That's the whole point. Everything she's done has been inappropriate when it comes to stock trading. This is not a political thing. I'm not saying Nancy is a bad politician or whatever. I'm saying in the context of the stock market, her entire career has been inappropriate. I mean, have you guys seen when people asked her about when she bought the Visa IPO? These are like videos you can just search on YouTube. Like, she has never taken accountability. She has never answered questions. She has never responded to like the need for higher accounts of ethics and responsibility. So it's absurd how her entire career has involved in the stock market, which is why the dude asking the question is a paradoxical question that is fun for me to see, because it's exposing the absurdity of what she's done for the past 30 years. And so I like it. I like that the guy asked the question. I like that the guy had some balls and said, you know what, we should. And all the people that were like, oh, get out of here, buddy. He made a good point, right? When they told him to get out, he said, hey, this woman has $100,000 salary. She has $100 million net worth. Shouldn't we ask her some questions about how she was this successful? We have all these fucking interviews of all these big time billionaires when they become successful. We're trying to figure out how they did it. Why aren't we talking to the most American of American dreams, Nancy Pelosi, who's making $100,000 a year, but somehow is worth $100 million? Like, she should be the one who's telling us how to get rich and how to get successful. So all those people telling him to get out the door and to leave, obviously they didn't understand the fact that he's asking a question that does deserve an answer, even though it's not going to get an answer. But the point of that question is to ask, why the fuck is he asking that question in the first place? And a lot of those people, because you could call them super Nancy fans, whatever they are, I guess they're getting their book signed, whatever it may be, they're not even going to ask that question around why he's asking that question. They're going to think he's a heckler. Sometimes hecklers are hecklers, but a lot of times hecklers actually have a good point. They're heckling for a reason. And maybe it should implore people to ask themselves why this person is making a fool out of themselves, getting assaulted by security, all this stuff to make a particular point. Maybe that point actually has a real point. All right, that's it for me. This was fun. Hopefully you guys enjoyed it. 1 hour, 30 minutes on the Sunday Futures show. Does she actually have a new book? Nancy Pelosi, new book. Does she actually have a new book? Holy shit, she has a new book. It's called The Art of Power. No way. Is this real? Is this a new book? Is this legit a new book? When did this come out? The Art of Power. August 6, 2024. This Dude, maybe she talks about how she's insider trading in this book. The Art of Power. Wow. All right. Well, this book is probably going to make her some more millions, and she will continue to compound the power that she has been being able to compound. Art of Insider Trading. Oh my God. That's hilarious. That's hilarious. Chapter 1, stock options. All right. That's it for me. Thank you everybody for joining. Hopefully you guys enjoyed. Monday morning, tomorrow, 8:45 a.m. We'll be back on the market open. Got a lot to discuss. We had one of the bloodiest days all year and one of the bloodiest weeks of September. Last week, down 4% for the week. Broadcom down 10%, Nvidia down 15% for the week. It was a tough week. I am curious to see how Palantir trades tomorrow, if the hype can maintain itself even under a bad macro. And I'm curious if we've bottomed in September, given maybe we pulled forward a lot of bearishness. Historically, we're supposed to be down 4% for the month. We were only down 4% for the week. Maybe that's the bottom, or maybe we've got another 4% to go. So we'll see what happens. 8:45 a.m. I'll be back, and we'll break down what's going on in the stock market. This is going to be a fun week. I said this on Friday to end the stream. There's going to be something big this week happening. Can't say what's going to be happening, but it's going to be very fun. I'll be traveling, and you guys will get some more information on it, probably starting on Thursday or Wednesday or Thursday, around that time. I'll still be doing the market open, market close. I'll be in a hotel, but this week will be fun. I think you guys will enjoy it, and we'll have some good content. All right, that's it for me. Thank you, everybody. I'll see you guys Monday morning, 8:45 a.m. tomorrow. Bye, everyone. Have a good one.